Let me now bring on board Prateek Agarwal, Chief Investment Officer with ASK Investments. Prateek, morning, always good to have you back. Prateek, suddenly we are getting twisted from all the sides. Global growth concerns are back. Europe, there is a resounding note to austerity, and China seems to be threatening, seems to be slowing down further. So in this kind of an environment, what is your portfolio strategy?
No, yeah, clearly, versus some time back when we were reasonably hopeful that valuations are looking good and market should find its feet and start to create a bottom at these levels. Suddenly it seems that we are getting back to a December kind of a scenario wherein Eurozone instabilities were also a part of the whole picture while they had receded over Jan to March kind of a period. So once again, we continue with a defensive kind of a portfolio, very low beta. There is, beta of our most aggressive portfolio at this point in time would be 0.6, 0.7, and that is what we are doing.
Which means you are still not selling this market down. You are still fully invested.
Yeah, I mean, suppose you had, stocks in line with the index and then you kept a higher degree of cash, you would end up still with slightly worse kind of a performance versus, having a defensive portfolio but fully invested at this point in time.
Prateek, what drives the market in the short term, in the medium term and in the long term is liquidity. At a time when global risk of trade is at play, global fear trade is back, what will drive liquidity back to India?
And I will take that question slightly differently. Indian markets have been grappling with hosts of issues over the last few months. Negative liquidity, let's say, the banking system borrowing more than 1 lakh crore from RBI being one. Versus other part of the globe wherein there was a risk on trade and markets were doing well. We have not been doing well for the last 1.5 months, mainly on account of our own issues. Our call was that as things normalize, which is uncertainty over GAR having receded and maybe more clarity emerging over next 1 month, maybe liquidity situation, domestic liquidity situation improving over time. Maybe some bit of policy making in terms of fuel price increases, in terms of some reform measures like land acquisition and coal mine allocations being announced over the next 2 or 3 months would again bring out equities as to be significantly more attractive versus other asset classes. Especially since at this point in time valuations across the market are very attractive.
Prateek, what do you make of ITC as a stock? It's not a small stock now. ITC has a 9% weightage on the Sensex and about 8.5% weightage on the Nifty.
We believe this is a business which is a compounding business, very little volatility, very good defensive characteristics. At this point in time, there are several positives for this part of the market. The only negative being that, versus in the past, valuations are looking slightly peakish. And secondly, it's very, very overowned at this point in time. But I think we as a house keep faith on, defensive at this point in time. That includes ITC.
Prateek, in the portfolios you manage, in the stocks you own, are you working with the possibility that in next 1 month, in next 2 months, Indian markets could retest December lows?
Yes, that is why I said we are positioned very, very defensively. December lows were very low, frankly, and I think after that some bit of time has passed. We would not be as negative. Even if we take some amount of time correction, the fact that 1 quarter results have gone by and they have been more or less in line with expectations. Our sense is we may start to form the bottom somewhere 4-5% lower than where we are, which is still 5-6% higher than where the December lows were. So at this point in time, we are not as negative. Even in December, we had this combination of no policy making here, stress in Eurozone, etc. But versus that, we have now seen that Eurozone problems get resolved one way or the other. At the end of the day, whole of Eurozone is single currency. It's like one of the Indian states not doing what the center is trying to make them do de facto. So, the same amount of fear which was there in December may not be recurring at this point in time.
Right.
So, I am more hopeful than I was in December. Frankly, we would be more positive than negative at this point in time.
Prateek, given the way how some of the mid and large cap PSU banks have reported poor set of numbers in the near term, do you worry about asset quality, and do you expect to hear squeeze in margins from some of these banks in coming quarters?
Yeah, answer would be affirmative on both. We do expect squeeze in margins because lending rates may be going down, deposit rates won't go down in a hurry. But PSU banks would make some amount of treasury gains if liquidity situation improves. It's not happening as of now because the banks continue to be large borrowers from RBI, and there is a pressure on the rupee, so the inflation outlook is not improving. And yes, we do expect NPA issues to crop up almost definitely. So this is a part of the market which is weak and may stay weak for some more time.